Welcome to Stock Market Pulse. My name is Eric from stockoptionassassin.com. In this edition of the video series, I want to talk a little bit about an article I came across, very interesting, written by Jenny Cosgrave at CNBC. And she brought up something I hadn't really thought about, but something that's very interesting. And I wanted to see as a more of a short-term trader if there's any opportunity here. And what Jenny points out in the article is that there's been a lot of inflows into emerging markets over the last several weeks or a couple months. And this is a great question that she has: bouncing back or further to fall. And basically the gist of some of the article is a relationship to the dollar, and how since there's sort of a lack of a rate hike, or at least the rate hike's been pushed off, the dollar's been relatively weak. And this is actually good for commodities and some other things. You can see gold's been kind of catching a bid. And so I wanted to take a look at the charts in regards to the dollar and emerging markets. So let's flip over here to the charts real quick. You can see on the left, I have for the dollar, I have a UUP, it's kind of a proxy for the dollar, and then over here I have the EEM ETF, which is sort of a proxy for the emerging markets as a whole. And so one thing I wanted to sort of point out is, this is a weekly chart on both sides. You can see 2015 started here, and the dollar had already started its rise with the anticipation of the rate hike, or a potential rate hike. And obviously that hasn't happened yet, and there's been a lot of slowing growth around the world, and the dollar's been kind of fading here. But to me, the dollar still looks very, very bullish. It's just in a giant sort of pennant pattern. And if it were to fade a little bit more, which is very possible if the rate hike gets pushed out to mid 2016, let's say that, the dollar could fade a little bit more, and that could give a boost to the emerging market. So you can see, really, I have up July here. So July of last year, the dollar started to take off, and that's really around the turning point that the emerging markets kind of came down. Now, it's not just the dollar that causes that. There's definitely some oil concerns, oversupply, and there's a lot of other factors there. But it also isn't a coincidence that a stronger dollar is pushing some of these things lower, because for the longest time, when the Fed was printing money, everything was going up because the dollar was weaker. So in this case, it's starting to reverse. It's still pretty choppy, to say the least. So back to the rate hike. If the rate hike is pushed out and the dollar continues to be weak here, let's flip this down to a daily chart. What you're going to see is, if the dollar, like I said, if the dollar sort of breaks lower, I think emerging markets could actually catch a bid. And if you look at where we're trading right now, we're trading at the $35 level on EEM. And what I'm starting looking at is what are my next resistance points. So you have 37 and a quarter, you have 38 and a quarter, and then if it gets really bad for the dollar, then yes, maybe you could get up into the 41 area. So those are the levels I would sort of play against. What I think right now is that the rate hike is probably pushed off a little bit. And what I'm seeing from the emerging markets is exactly what Jenny put in her article. The last few weeks, there's been a lot of inflows. And actually, I think this is a 14-week high she mentioned. And so if I don't know about 14-week high, or if you go 14 weeks back, I don't know exactly where that is. But basically, the last few months, which you can see that sort of marked the bottom, and we're starting to sort of rally from here. So, the question is further to fall or further gains. I think in the short term, as long as the dollar stays weak like this, I think this could be some opportunities here. I'm liking this pullback. You can see we sort of broke the $35 level. We're consolidating above that. If that can get going, then I think you get a move up to the 37, 38. So when you look percentage-wise, you're looking at 5 to 10% easy if the dollar stays weak. So hopefully that helps. You guys have a great day, and we'll see you at the next update.